I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets last week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market rose sharply in the last week as the rebound that came late last Friday turned into a complete reversal, with the market gaining back the 3% that it had lost that previous week. Buyers were really happy to see more favorable reports come out about the U.S. and China trade talks, even though there was a delay to that supposed signing meeting that was coming in March. That really seemed to not bother the markets at all, and government manipulation could be seen everywhere as huge stimulus in China comes again on top of huge stimulus they already declared in the previous weeks. Eurozone, of course, staying in their negative interest rates, and they have lowered their economic outlook. And Japan keeps talking 2% inflation, and they can barely get to 1% inflation, and they have now lowered their economic outlook and keeping their rates at, well, NERP, that's negative interest rate policy, at minus 0.1%. It is all over the world that this massive amount of stimulus comes 10 years after the Great Recession hit. It's just amazing that they don't see that what they do doesn't help. And long gone are the days of the markets that move based on anything other than government influence. I've been around here trading 45 years, which 45 years starting in early part of May. And that's amazing. I've seen a lot of markets out there, and these last 10 years are markets that are very different than, well, my previous 35 years, as even though the Fed was in action, it's never been anything like these activist Feds that are simply stepping in and changing the world as to how you figure what the real economics are out there. And with world economies weakening, corporate guidance pretty much weak across the board, well, there are pockets here and there where you get something positive. No one really cares about that at all. And the tell really came last week as Boeing fell very hard after the second of two horrible crashes with their 737 MAX 8 airplanes and 9 also being grounded. And there's rumors out here on Friday that pushed the market up through a key resistance level that Boeing had a quick fix coming for that airplane, and then Boeing came out and denied that. But the market is holding up near its highs of the days right now as I'm doing this video. The fact that big Boeing decline could not break the market, and that's one of the tells, as the Dow, that Dow stock really weighed on the Dow, which underperformed this week, but the stock market was still able to surge to the upside in a big way. And Apple helped that also, because seemingly on the day that Boeing got creamed, they came out and upgraded Apple like they had some intention around that, and that helped the market start to move to the upside again, and really firmed the market up. And also semiconductors late in the week got very strong also, and that helped the market. We described in last week's show of Market Week, and also in our Wednesday show on Future Speak, where we analyze 6 segments of the futures markets, we talked about momentum and how that was remaining positive using our momentum indicators. Now, they didn't lose ground. They stayed positive even through that 90-point drop in the S&P 500. So between the Boeing decline, not being able to break the market, and momentum staying strong, that was really an important tell. And as long as those market internals remain strong, well, the rebound that we've seen in the market and this gain of 20% is not over. We're going to talk more about that as we move into the short-term view at the end of the week. And not all internals really are remaining strong. While our indicators on momentum continue to show positive, there is one indicator that our cycle analyst RV shared with me that was put out by Index Indicators, that this is worth a look, because right now there's something a little strange going on, and that is while the S&P 500 surges up to a high, what we have going on here right now is a condition where the S&P 500 is moving up, but breadth indicators here are lagging. And you can see right over here, this is the breadth indicator as it started to come down while the market corrected, about a 3% drop, and you could see the S&P 500 now moving back up to a high. But the breadth indicators are really weak, so you really want to see breadth confirming on the upside, and in this case, it's not doing so at all. So you're going to have to get a condition in here that changes where we start to see breadth picking up and catching up, or this rally that we're seeing in the market will be the last of it. Really important to see it expand. And it's when you look at the action in the Russell, which is really starting to lag the rest of the market, that is an indication that maybe breadth is failing at the lower end of the market. In other words, the very low cap stocks that are represented there, and potentially the lower segment of the S&P 500, which just may not be participating. So a narrowing an amount of leaders on the upside is what we're seeing, and that is an indication of some of these internals beginning to weaken. The big test is going on right now, and as this Boeing news came out, the S&P 500 moved up through a key level and seems to be holding very well. I'll show you that in a second. And even if we do get this successful attempt, which does look likely, and I'm going to show you more about that also in the short-term view coming, we still see that there's a significant correction coming in the stock market. And all along we've said that decline is going to come sometime in the late spring, we had a range of peaks between February and May, and now we've had a little shift, so it really looks like it's May, June is where the significant bottom is likely to come. So we're looking for the market to top, and then for the market to move down very sharply. But right now it's not happening yet, and certainly has moved beyond levels that we expected. We're still looking for that peak, and we think it's a very high probability that between now and early June, we're going to see a sharp decline in the stock market. In the meantime, let's take a look at what's going on in the 60-minute chart of the S&P 500, which gives you a clear look at that rise in here that we have had this week. Not a whole lot of news during the week. Here overnight on Sunday night, on Monday, the markets were stronger overnight, and they weren't really not affected by the fact that Boeing dropped 12% early after that Ethiopian crash. And at that point, many of the 737s were grounded, but the market got strong, and the Dow actually recovered at that point. Boeing was very volatile moving around, and the NASDAQ exploded 140 points to the upside as Apple moved up $6 on an upgrade right there, as you can see. And all of a sudden there were doubts overnight over the new Brexit deal, and there was a lot of Brexit news that came out, and towards the end of the week they simply voted to delay Brexit, and I don't even know how they can do that because they have really a hard deadline at the end of March, and that's not really following the will of the people. But it looks like they're going to get a delay in Brexit, and that kind of weighed on the market. And Boeing down 7% again overnight here on Tuesday, but then Apple moved up again. Interesting how these moves come perfectly to offset the decline in Boeing. CPI up only 0.2%. That's after the previous 3 months having been unchanged, and year over year there is a very sharp slowing. Year over year it had peaked up to maybe about 2.8% for a while, and now inflation is really coming down again. And I can just tell you that that's a factor of the deflationary forces that the Fed put into place way back when they tightened up before the Great Recession. So we're still feeling that. It's 10 years old, and it's going to be hard to get any kind of inflation in here with the Fed having manipulated problems. And also the technology, IT is so strong that it's wage growth is really slow. Here you see Boeing rebounds here, and the market moves up here on Wednesday. Here Trump and Xi delay their meeting for April or later, and you see it barely weighed on the market right over here. And Trump came out and said on Thursday that trade talks were progressing quickly, didn't really get much move. And this is the only day in here, Thursday, that the market actually finished just slightly lower in here. And you can see on Friday what's going on as this report about Boeing that they had a quicker fix moved the market up sharply, and that moved it up through the resistance area in the S&P 500. The Empire Manufacturing News survey came out at a 22-month low. That weighed on the market a little earlier, but then just as we have seen basically through this huge rally these last week and something, every single day the buyers come in, and pretty significant, just as they did here today. So we have a market in here that is moving up very sharply here, with on Friday the S&P 500 now up about 0.75% as we get into this midday period, up about $22. So a really significant upside move going on right now. Significant not only because it's strong, but because it's moving up through a very key level. Later in the show, I'm going to show you an important thing that happened in implied volatilities that as I show you a VIX chart that I think is very valuable. So I'm going to do analysis just in a little while on 16 stocks that were the best and worst for the week, and then give you my short-term view on 5 sectors of the market for next week. And I'm going to include that VIX analysis in there, which I think is important. For the week, the stock market, the Russell and the S&P 500 both up about 2.5%. The NASDAQ up around 4%, and the Dow Jones a laggard around 1% to the upside. A little bit more maybe now as Boeing has gotten some legs back here. Bond market, 30 years, a few ticks to the upside, not much. What's interesting is that the 10-year yields fell about 3%. And so we have a steepening of the yield curve going on. And the financials like that. And in my show that I did on Thursday, where I did a review of the airline group, the defense aerospace group, and also the financials, I was talking about the fact that the steeper yield curve is good for the financials. At least investors like that, and that's likely also to keep the stock market buoyant while it looks like there's another shot to the upside in these bank stocks. So I looked at 5 money setter banks and investment banks, and I think that's a very interesting video for you to see. Important to be watching all of my videos so that you can get really a good feel for all of the great stuff that we bring. Gold up about $6 on the week, rebounding as the dollar moves down about 0.8%. That in line with our expectation on the dollar. Oil moving up as OPEC is doing everything it can to fight what are slowing world economies and super supply productions going on here in the U.S. So it's fighting to hold it up, and now Mideast tensions are picking up here in the U.S. In the Middle East, not the U.S., and with Hamas having shot missiles at Tel Aviv for the first time in almost 5 years. and then Israel then bombing Hamas, and that's really picking up. Lots going on in the Middle East, and that's a certainly dangerous situation. So we'll see if the market's going to pay any attention to that, the oil market. Maybe that's kind of why it's firm. That's it for the opening segment. I'm going to bring you lots of stuff as we move forward. Whether you're new to trading or you're a seasoned veteran, our video library can be a huge boost to your knowledge. I want to share with you our 8 different categories of videos in our Level 2 membership and tell you about this just great offer. Our library contains all of these categories of videos, nearly 400 videos, and we do 3 new ones each week. Future Speak, which we do on Wednesdays. This gives you our analysis of 24 futures contracts. Tools for Text, there is nearly 75 videos in here. We talk about all different kinds of charting tools and studies. You'll really grow your ability to look at and read charts. Trader Psychology, well, I've been a coach, facilitator in personal growth and in the markets for 22 years, and I really help you look at the personal issues that really can get in the way of your profitability. IRA MO is our look at longer term strategies. Stock sectors we do on a regular basis, where we look at groups of stocks and ETFs. They're ready to pop or drop. Big picture analysis, I just did a recent one on the U.S. stock market, always looking at the major markets. Style, strategy, and plan, well, these are many different subjects on engaging in the markets and trading. And our, of course, Market Week short-term view, which we bring you every single week on Friday. And then you can take a look at the archives also and see what we said in the past, as those archives are stored there. You can have this unbelievable value right now as you look at well over 300 videos, and the first-time members get this entire video library. You can binge watch all of you want with these 3 new videos that come each week, and it includes our stock index report, which is a very comprehensive look at the indexes, where we show you our charts every single week that we look at in the S&P 500, the NASDAQ, the Russell, with several of our different studies in there also. You can have all of that, a 1-month trial, half price, only $18.50. Do all the binge watching that you want. You can cancel anytime you want, or it'll renew, and that will give you the ability to just keep watching and keep learning. You want to get our half price link, write me at slim@askSlim.com, or go to the front of the web page and click on Contact Us and let the support team know that you want to get that half price link. $18.50 for all of that learning that you can do. I mean, it is just an incredible offer. So please do support yourself in learning and support us becoming an askSlim Level 2 member. Thanks a lot.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are high these upside moves are selling opportunities.
All right, for the best stocks for the week, we're going to do what we always do. We look at weekly charts and I apply cycle analysis. These are the rhythms of the market or the heartbeat of the market. You want to learn about this style of analysis, all you have to do is subscribe to our workshop. 20 video modules on cycle analysis. Took me 2 years to write and over 6 months to produce. And there's nothing out there like that as comprehensive as that workshop. So just go to our website, go to the top where you see workshops. You'll see 2 of them there. And please do consider our workshops. Great source of information. All right, so the best for the week, the stock that we're going to start out with is Diamond Offshore, which is part of the energy sector oil service, or the drilling stocks. This is a stock that is trying to make a base, and you'll see what I mean. Now, on some of our charts, we put in our cycle analysis, on the bottom, overlaid by the individual ETF in there. In this case, the dashed line is the OIH, and you can see that the group movement, along with the Diamond Offshore movement, is very similar. So it pretty much tracks the group very closely. So that's always helpful to look at the ETF. And also we have our colored phasing in here. When it's green, it shows you the rising phase. When it's yellow, it's a corrective phase. And if it has a breakdown, it becomes a red phase, like you see right here. And this early breakdown, which brought you the big decline. Now what we have going on is a basing. In other words, you made a low over here, and it tried to break, and it couldn't, and now it's rallying again. This looks a little premature to us as it moves up as energy gets stronger, but you could see it's way off those peaks and barely has moved up. You can see the 38% is way up over here. So we believe it's premature, and that this is likely to have one more drop. And you can see the forecast that we put in here, that it'll probably test this area under $10 again. And that to us would be the buying opportunity if this base did complete and not break down. In other words, not get below this low over here at about 865. So this looks like a base forming in there. And if you were an investor and you believed in the strength of energy going forward, which I don't necessarily, then this would be a stock that you would be patient in, and in a few weeks, in a dip, you would be another buyer. A Noble Corp, a cheap stock in this category, only trading here at $2 and change. This is a similar pattern. Now, I don't have the colored phasing in here, but you could see the very clear cycle rhythms as we identify the important movements in here, that big break there, and the base also forming in here. And you could see the synchronicity in the same timing on the low as we just showed you in diamond, that this is likely to pull down for about a month. And if you wanted to buy this stock, it's probably at 260 or 270. That would be the good place to enter in about a month, versus its current price at about 292. And the last one we'll look at in this category is RIG. Now you can see this one actually is a little stronger, and it's getting up to that sell zone, that 38% level, and we think that it will also decline again. It's got longer cycles, and you note how it's out of synchronicity with the OIH right there. So they don't always move perfectly with the group, and this is one that has really longer patterns in there that you can see. So again, we're looking for this to not be able to get much over this 9.5 area, and then moving to the downside again. Now, here late in the week, we've gotten the semiconductors helping drive the stock market to the upside, and NVIDIA up about 12% on the week. You can see that right there, and you could see another base forming. Now, you know, this stock got caught up in the Bitcoin crypto craze and then collapsed. And you could see the value of the cycle analysis is each one of these positively configured cycles, lower highs, lower lows, kept going up and found support at that 34-week moving average, which is pretty common. Here, see, I have it marked off right here. And then look what it did here. It broke that support with all this time to go. So right here at about the halfway point of the cycle, and it collapsed. Makes the low and then rallies. Now it's basing. So you can see our support zone right in here. And again, we're looking for declines in the stock market out into May, June. This is in alignment with that. This is, and I showed that on the Thursday video, how many stocks are aligned with that. So even if we continue to have a little short-term strength in the market, it won't change the fact that we're looking for declines into the late spring. This is in alignment with it, and we expected it would get down to about under 150 between now and the next bottom that we expect there in early May here, late April or early May, and that would be a buying opportunity if it did hold right in there. So NVIDIA doing better, especially since Fitch has affirmed their debt, and that helped it a bit. Now Broadcom, or you might call it Avago if you like to, that's not it, AVGO. Look at this move in here. I mean, this is incredible. I almost couldn't keep up with the upside move as I kept revising the supports that are in here. Key level right there at about 305 on that 161.8 fib extension that's right there. And you could see it got up today to just about 300, and then it backed off a little bit, trading right now at about 292. Let's see what we're looking for in here. Again, this decline out into May right there for a correction, and then probably up again. So it's likely to get down to 275 in these weeks that we're looking at over here into May. And then it could be a buy zone right in here. And you'll note that this rising support zone right there comes down to about 264, which is reasonable for it to get down there also. You can see the nature of how this stock trades. Each of these cycle swings are very wide, and you see the minor cycle and the major cycle right there, and each of these are perfectly divided in half. You could see these halfway cycles right there. That's a little small right there. And then this half cycle right here, and this rally that came right on time. And notice the upward trend, positively configured. All of that really was very much in line with the cycle analysis, though you might have guessed it was going to stop at that resistance zone, but it blew through it here, and that happened just today. So that is a look at Broadcom, which has had this great move. Their earnings were very good. Their revenues missed, but the outlook they came out with really was liked by investors. So that's really what helped the market, was their stated outlook. A couple of stocks in semiconductor material category. Lam, LRCX. Excuse me. Look where it rallied up to now. That's the major sell zone. Now, you can see again the cycle analysis that's in here and stock formations. Look at the big diamond top that formed in there, and then when it broke under the diamond, it fell right to this, what we call nested bottom. That would mean the next rally would come, but it failed early and broke down right under this level. And look what it did. Fell through the whole time period and a little longer, which it often does on the downside. Beautiful rally in here, as you could see, and getting dragged up this week with the semiconductors with no real news there. And again, we're looking for a decline here into May. There's so much of this that aligns, and probably down under 163. So this is a sell zone, in my opinion. If you were bullish on the stock, this is not where you buy it. If you're bullish, you buy it down in this area here, under that area of 163, and then I think you get a lot more comfort in your purchase by doing that. Applied Materials, AMAT, in the same category, and you can see the same type of a pattern, as we have a shift that went on in there. And when these cycles, that's a thing about cycle analysis, is that you get a good sense for the rhythms, but occasionally what happens is that, especially on the downside, the selling is so severe it takes longer to use up all the sellers, and it gets a little shift that you could see right over here. And then I keep the old pattern and the new one to see which of those is really dominant. And interesting, you get this decline right into this older pattern right there, and now rallying again. But I actually believe this sell zone is going to stop it, and you're going to get a move down here below 36. Again, this lines up around May 20th for that low. So you can see the synchronicity of lows that we have aligned in here. One more stock in kind of tech land, Take-Two, which is really a gaming stock. And this stock gets a gain in here, and 7% on the week, or maybe 6 now as it's pulling off. This upside that you see right in here, that was based on rumors, and I don't really share rumors, but I can tell you that Sony denied the rumor. And this pattern in here suggests that this fib extension target at 78 is where it's going. So right now it's trading at 93. And we believe that 78 is a pretty reasonable target for it on the downside. So Take-Two, I think that if you think of this is the time to buy it, you better, Take-Two on that one, because I think it's going lower right now. And one more group we're going to look at is solar. This group got upgraded by Goldman Sachs. They really love the sector. And we had really liked Canadian Solar, and that one just absolutely flew at a time. I want FSLR. What's going on? There you go. And this is a stock that really looks like it's a powerful base being formed in here. So here's some major resistance. We could see it getting up to this 59.60 area before this upside move stops. And then probably a pullback again into May with the rest of the world. and then a really good setup in here. So once I have an anchor point in here, I'm going to be putting a buy zone in this stock. This really looks to me like it's kind of an inverted head and shoulders being formed in here, and it's going to, in my opinion, be a stock that can fly on the upside later in the year. I really agree with Goldman Sachs on this group. A cheapie in the group, SunPower, SPWR. You can see that it's in the resistance zone right now, but again, it's a stock that looks to us like it's trying to build the base in here. And this times out almost exactly with what I just showed you in First Solar. So decline sometime into May and then up. And to me, May is where the buying opportunity is going to come in a lot of things. And this solar group looks like one to really have on your radar. Look at CSIQ. I mean, I love this stock a couple of years ago, and it did like nothing, and at that time the PE was at about 5. Now the PE is more like about 9 on the forward PE, but there's been some huge upgrades to their earnings. They've made some great deals. Look at this pattern. So you can see the cycle movement in here. You can follow it and see how it lines up with the cycles on the bottom, and then it breaks out above this level here. And look at the nature of this cycle, the shape of it. This explosive move on the upside, which only leaves a couple of weeks of correction in here, that looks like this stock is a screaming buy around $22. I think it's going much higher. And this is a great looking stock when you look at that. I think that this group is one of the groups for later in the year. Well, this stock may be sooner than that. That are very investable stocks for longer term holds. I think that the sentiment for solar is just moving in their direction very favorably, and I think you're going to see a lot of tone changes in there regarding attitudes like Goldman Sachs upgrading this group. One of their favorites, and it's really one of my favorites too. I think they're going to be really good. Contracts coming like crazy in the solar category. So I like it a lot, and I think you just wait for the right opportunities to get in, and you're going to get paid. That is for the best of the week, and coming up are the worst for the week.
Coming up are the worst stocks for the week. There are some real stinkers here. Some of these are breakdowns or extending losses in really bad chart patterns, and some present great buying opportunities. Watch as Slim makes that all clear to you with his very unique analytical style.
All right, for the worst stocks for the week, it was such a big upside week that there isn't a lot to look at. I'm only going to show you 5 stocks in here. The first one we're going to look at is Boeing, which was the biggest loser for the week, and it's gained a little ground back here. There's something interesting about this chart, and that is I believe that candlesticks are very informative as far as telling you information about cycle peaks, cycle bottoms. And here you can see that this stock had this engulfing pattern before that news came out about the crash. Not that anybody knew that it was going to crash, but it's amazing that it made that peak way up over there and then had this big down week that you can see. Now, this is really a support zone. You can see that 34-week moving average coming over, and the 50 and the 61.8%. It's still up on the year, so it just has this enormous gap in here, and there's a ton of white space right in here. So we would expect that this pattern, and you can see the big megaphone that it just blew out on the upside of, we expect that this stock will try to make some bounces in here, and that ultimately it will move down again. Our target right now is at around 350, and they have a lot of risk. They have, after these 2 crashes, and they're these 737 MAX 8s and 9s getting grounded, and by the FAA and President Trump, their legal risk is just huge. On top of that, there are $600 billion in orders for MAX 8s and 9s. They're going to lose some of that, and they might lose it to other planes that they make, but they're also going to lose to Airbus and other makers that are going to take the business because of the tainted attitude that investors have about this stock. So yes, we could see bounces in here, but ultimately we see 350 As the best case, again, you could see the nested bottoms in here for the 2 cycles out around May 20th. And so we think that any rally that you get in here is going to be fake. And you're going to get rallies in there as there are going to be people that feel like it's going to be behind them. But it's going to take a long time, maybe years, to work through this problem that they have. The next one we're going to look at on the downside is DICS. You can see beautiful cycle action in here. You can see the half cycle and the dominant cycle, and where the bottoms align perfectly. If I talk about that, if you just go to the workshop page and you should watch my little video there, I talk about this more, so you get some sense around how to understand what these cycles are and how they work in the markets. And you can see in here the peak. So you have this hammer and that shooting star right there. Sorry, it's like an inverted hammer. And then that engulfing right there. And it made it right up into the fib target zone. It did the same thing here, the fib target zone, and then that engulfing right there. And now it breaks down very sharply in there. Earnings beat, revenues beat, but their margins were weak. And their interest expense is going up, and their guidance really disappointed. So we have this decline going on. Now, if you follow this pattern right in here, you see the rally, and then there was a little dip, and then another rally, and then another dip. So you had this low right over here. Then you had kind of the same thing right in here, and it made the bottom. Here's your rally and your dip right here. So this looks like about a couple more weeks right in here. An attempted rally up right in there. And you could see this would be an area to short the stock right there. Probably 36.5 to 38, and then likely moving down again. So if you get a bounce in here over these next several weeks, it is very shortable for traders. That's what we look for, is the highest probability entries, because if you improve your entries, you're going to improve your results for active traders. So that's a DICS. 8% down on the week on a pattern that is not looking very good. Next one we're going to look at is DG, which is Dollar General. And you can see it here. This also hit that fib extension target zone right there and then fell off very sharply. Earnings missed in there. It's down about 5% on the week right now as it's rebounded. You can see that 34-week moving average and the effect of it right there. And we think that it declines, well, guess what, to around middle of May, May 20th. So if it rallies back, which it is right now, we believe it is a sell, especially for short to intermediate term traders that are looking for somewhere to have a short side bias. This one really looks like that to me. Let's take a look at Facebook. Now, this stock has a lot of news right now. First of all, corporate shakeup is going on. They've lost 2 more executives. And then, beyond how anybody understands this, what happened to Facebook and several other sites is that horrible, disgusting, murderous shooting in the mosques in New Zealand somehow got live streamed on Facebook. And now all of these sites, Facebook, Twitter, they're all working to purge any of those videos that might be on those sites. And look, it got up into the sell zone. Now, the sell zone is made up from the swing high, swing low analysis, from this peak to this decline right over here. And often you get rallies up into around the 50 to 61.8%, which is these levels right in here. So we put those in, and you can see it failing in here. There's 4 attempts to get up through there, and it really can't. Now you have this, what they call a dark cloud cover being formed right over there. And this stock is likely to move down sharply. They're somehow, besides the fact that their safeguards got circumvented on this, and they have executives that are jumping ship, they're doing a model change now and changing the how their news feeds are done. And I think this stock is a screaming sell. I think it's over with. I think their whole growth period, that old cliche, the bloom is off the rose. Well, that's the case in Facebook, and I think it is a screaming sell at this level. This, to me, is an optimistic type of a pattern in here. It's just gotten late enough to think that it's going to have a dip and then a rally, and then somewhere out over here next year, a very large decline. I think Facebook is over. And if I were an owner of this stock based on this pattern, I would sell it. One more stock we're going to look at in the worst of the week. Caesars was down 4%. So that is CZR in the category of gambling stocks, hotel gaming. This is a basing pattern going on here. And this is really interesting because the cycle analysis that I have in here shows you the ranges, in other words, the what I call the dominant directional force, along with the cycles and configuration. So you can see the upward configuration, these green arrows in here, is it followed the dominant upward force. Then when you broke under this level and had a weaker cycle, it gives you the downward force, so it shows you the downward force in here, and then the low that came right in this at this point right over here. Now Carl Icahn has sharply increased his holdings in here, and I think he's right. I think that this is a base that's forming, and it's already in the buy zone. Somewhere in here in these next 4 weeks, I think that this stock is going to make this low and then break this downward trend and establish a new upward trend, as you could see. This is the end of that declining phase. This is the rally in the new upward phase that comes over here in April. And that says to me this stock has a good shot at the upside. Another stock that I think is investable when we see that. So in the worst of the week, a 4% drop in Caesars. I just think that UBS, who upgraded this week, is just a little bit early. It didn't even move up on the UBS upgrade. But this base is forming. And I think this forming base is going to bring you some good upside in Caesars, which I think is, fixing itself. And that could be a good opportunity. That's the worst of the week, with maybe one of the best opportunities. I'll be right back with, the short-term stuff.
Next is Slim's short-term view for the coming week. Watch as shorter-term charts are used to project 5 major markets in price and time. And there is also an emphasis on momentum to help keep positions set with the highest odds of catching the biggest short-term moves.
All right, for the short-term view for the coming week, we're going to take a look at short-term charts, daily charts instead of weekly charts that have also a cycle analysis on them. We do cycle analysis on daily and weekly charts on the 80 best traded symbols, and our level 4 members get those charts, and our level 3 members get our rankings on them, even though they don't get charts. We've got some really good upgrades on that service coming too down the line, so keep your eyes open for that. I always want to be accountable to what I said the previous week, and I look at levels of support and resistance, I look at patterns, and I look at whether I think it's going to go up or down for the week as we look at these 5 sectors, and then I rate myself based on those, like 15, 5 times 3 is 15 different categories of whether I analyzed it correctly or not. Last week I was only about 40%. It was not a great week. I missed in light crude, which was stronger than we expected it to be based on our analysis, and I also missed on the stock market, which has a very clear shifted cycle pattern, which I will show you as the momentum stayed strong in there, and you'll understand that when I get to it. So let me switch over here to the daily charts and put up the /CL, which is the light crude market. Let me just get that to pop up in here, and there we go. So actually light crude had a bit of a shift also in here, and I'll show you what that looks like, and as it moves up into very important resistance area. So the old pattern that we were looking at right over here, you could see it's grayed out right there, and you could see that low right at that point, and the rally and the low and the rally. Well, what happened was that this decline right in here made a better low, and we realized that it had gotten longer, and then this dotted cycle is the one that we like it. So on 313, we noted to our subscribers it was likely that this had shifted to the right, and that is what happened very clearly in here, and now you could see the cycle rhythms match perfectly. Here's your resistance up here around $60. It has a chance in the next week at $60, but then we think it's going to stop and then start to give ground again, and that this effort that OPEC is, putting forth to help market move up is just not going to work against the fundamentals that are out there. So we think that the Mideast tensions that we're hearing might continue to help it. It could get up there close to 60, but we're going to call it a week that tries to get up and then reverses to the downside with a downside week, and maybe small. Why do I say small? Well, here's where the momentum turned upward, and it remains strong. You can see as all of this upward momentum. The slim ribbon programs the volume bars on the bottom also. So when they're all green like this, it means momentum is still strong, and you expect that the advancing portions of cycles will be stronger than the declining portions would be weak, and keep continually giving you higher bottoms and higher peaks, as you see here, and now the higher peak that we have right now. So this overall is still a short-term positive configuration. However, getting higher into this resistance area and the likelihood of an intermediate peak is important for the market likely not being able to hold gains in there. So we're going to look for a rally, maybe testing 60, but then stopping and then moving down again after that. We're going to look at gold right now, /GC. Let me move in, as I keep these on 2 years, but then to get the alignments right, I have to then move them back and zoom them back in. So here's what's going on in here. Now I want to note to my subscribers that this cycle right in here, the minor cycle, got a slight left shift today, so that you can see the bottom in there clearly, how that worked. You can see the bottom right in here. So this is that cycle that we're looking at, and this is the rally right there. We thought that it would get down maybe to 1280 again and dip early and then rally again. That's what we called last week, kind of an early dip and then a rally. Well, that's pretty much what we got, but we thought that it would not be able to hold gains for the week. And it actually was down a little bit until this uptick here on Friday. So we didn't get this perfect, but we still think that, we're pretty much range bound in here, and that it could try to get up. Now follow this cycle right in here. It could try to get up to this area here, 1315 to 1325, but then this is going to take over, and this bigger one right in here, and the silver one right up over here. So way out over here are further corrections. We don't think that the intermediate is going to help the market move up, and for now we think the dollar is going to have another move to the upside pretty soon. So we're going to look for this to not be able to get through this level, fail at 1315 to 25, and then move down. We're going to call it a small up week, however, because we're still early in this upward move and probably landing somewhere in that pink zone right over there, the lower resistance, before it then in the following week likely turns down. So we're looking for 3 to 5 weeks, 3 to 5 days more on the upside in here, and probably maybe being a little bit on the upside during the week. That is a look at the gold market. The next thing we're going to look at is the $DXY. And now, remember I said I thought the gold would go up for 3 to 5 days on the upside. Well, I think that you're getting a similar opposite thing in the dollar, and they do move opposite each other. So we think the dollar is going to move down this week and test this area of support at about 96.25. Note the range that we put in there. This is the 50% minor resistance right at that point, and this level right over here at around 96.20. So we think 96.20 is a good target for the downside for this week, and we're going to look for a lower dollar. Now, momentum in here is weakening, as you see, but it is still positive in there. Did I give you the gold momentum? Let's go back there, because so many people say to me, you didn't talk about the momentum, so I want to. In gold, the momentum that you can see in here is still negative. So that's going to prevent you from getting any real upside moves. So sorry I jumped back and forth in there, but that's gold, and the dollar pretty much opposite of that. Now we're going to look at the bond market, /ZB. And this is really also range bound, and we see a range in here of about 146.22 down to about 143.17, and it's been stuck in that range And I see the same thing in the 10-year yield. So we think we're going to still be stuck in that range in here. That is likely to bring us a decline to the bottom of the range this week. So last week we said that we thought that within 1 or 2 weeks that this would stop and then move back down to this area around 144. Well, 1 week is gone, and momentum is slightly up, but not that strong, and we think that this is likely to turn down again this week, and we're looking for a down week in the bond market with just slight upward momentum, which would be pretty easy to lose, and again, pretty much stuck in that range still that we are looking for. So for the stock market, we thought that last week it would, chop around, move down early, and then move to the upside again. The patterns were such. Well, it elongated the pattern that it was in and confused us for a couple days until we really got a handle on it. Part of the things that, and I mentioned this in Future Speak also, about analyzing markets that are moving up steadily where they don't have a lot of downside movement, is that because cycles are measured from bottom to bottom, sometimes you don't have the ability to get a good handle on reading them. In this case, I had believed that the way that this pattern was operating, and look at this gray one right in here, you see that low right there, and you see this low right over here, that I was just guessing that we call these swamp cycles because the upside is so strong that they can't they don't really show you good downside. You can see that 13-day moving average in the middle of the slim ribbon, and this 90-point downside move didn't even turn it into negative or neutral. It just stayed positive and then took off again. So you see the shift right in here where I thought it was this low, and it's clearly this low. So I have to adjust when I see that, and that's the beauty of cycle analysis, is that when you read it wrong, it tells you, and then you can make the adjustment and then get the sense that, when I saw this, then I knew that it had changed, and then I updated this for our members. So I want to always do the best that I can to keep us with the best understanding of the market. So this is the condition that we're in right now. This is a very heavy resistance zone. It's now at 28.27, and the top of this zone was about 28.22. And then let me just zoom in here a little bit and see if I can get a little closer look for you to see right here. There you go. So this right here is that Fibonacci 50% fib extension, which is at around 28.28, which is about where it is right now. And then the next one up over here is 28.54. Because of this shift, it raises the probability of getting up to this 28.54 number. That it has me looking hard at what this long-term top that I think is forming and what that's going to look like, because if we do get above these levels in here, and we're testing them right now, then it's going to be likely that the markets shoot for some kind of a double top or the test of the highs that are up here at the top of the fib extension zone. So right now, this is not my prediction. It's most likely that it gets up here to about 28.55 based on these patterns, and then gets into this period of a very severe risk that goes out into the first wave is in mid-April, and then another one comes into mid-May. I showed you so many things this last week about that mid-May period. So we'll see how this can extend and if this can hold up in here. Right now, the period of risk is right over here after it has some minor decline and then up. We're going to call this week a little more up and then rolling over, and we're going to look for it to be a small change in the week because we think it's got a little more to the upside and then downside, which won't make for a very big change. Momentum still remains strong. You could see the ribbon widening in here again, so it really speaks to the stronger momentum. Beginning of the show, I showed you a different look at some internals with the breadth numbers, so we're going to be seeing if the breadth numbers start to improve or we actually get a non-confirmation and the market fails. So this is important. How far does this get up in here? Does it zoom up here to that area of 28.54, or does it fail in here? And then this minor pattern right here how far that goes down is important. So we would see that it gets down to about 25.83 or so. So that's it. We think that things have improved as we look at that. One more chart we're going to look at in here is the VIX, VIX. This is the weekly pattern in the VIX, and this is important right over here. This breakdown right over there lowers the potential for higher implied volatilities out here until around April, late April. So this is another reason to believe, and I'll look at the daily chart here also, as you could see, another reason to believe that the market has got more to the upside in here, as this implied volatility, the VIX, has really had a pattern that looks like it has broken down on the short term, and that would mean that there's still probably a month's time at least before this market peak gets into place. So when I look at that, that's just another tell to me that the market has got some life left to it before it puts in this top. So we'll look for the stock market over the next week to try the upside a little more and then reverse and then move to the downside with not much change. That's it. That's everything I have to show you today. I hope there was a ton of great information. I want you to be so careful because it is so crazy out there. We're always wishing you great trading.
Well,